on changing. You cannot sit from 10:30 to 11:30 like this only. You will be doing some movement, right? So over here, stock is a static concept. That means it remains constant, and it's a dynamic concept. It keeps on changing. Example, the population of any country, capital, stock of machine, etc. are a stock concept. And over here, savings. It keeps on fluctuating. Depreciation, interest rate, etc. all keeps on changing. So that's a flow concept. Okay. So if somebody asks you what is the difference between stock and flow concept, so stock variables refers to those variables which are measured at a particular point of time. Flow variables are those which are measured over a period of time. It does not have a time dimension, no particular time range, but here it's a flow concept, so there is a time dimension. It's a static concept, it remain constant. It is a dynamic concept. Examples are here. Clear? The difference between stock and flow? Clear, Sumaya?
Yes, ma'am.
Oh, quickly write it down.
Okay, ma'am, I'm done.
Okay. So now we are going to do the most important concept, which is the circular flow. Right? So usually circular flow is, that means whatever money you will give to this person, that will come back to you. Yes. But over here, I told you that there are 4 sectors. Yes. But in your syllabus, you are only dealing with 2 sector model. Clear?
Yes, ma'am.
Okay. Just a minute. Okay. So 2 sector model. So only 2 sectors would be involved when we are doing this. Clear? Got the point? Okay. So in the 2 sector economy, basically, wait a minute. We have only one. One is the household and one is the firm, which is the okay. So we are going to do the 2 sectors. One is the household that will take place, and other one would be the producers, which are basically the firm. Okay, let's just understand with the help of diagram. For example, this is a household. Okay, and these are the producer, basically the firm. Okay, The household will give, what they will give? They will give land, they will give labor, they will give capital, they will give entrepreneur. Done? They have given this? Yes or no? Done? Is this clear? The household will be giving land, labor, capital, entrepreneurs to the producer so that they can start their company. Is this clear? The first one?
Yes, ma'am.
Okay. Now, if you have taken something, in return you have to give something. So for land, the producer will give rent. For labor, what they will give, tell me? I told you this in the previous class. For labor, what?
Wages.
Wages. Very good. For capital,
Profit.
interest. Okay. For entrepreneur, profit. Okay. Clear?
Yes, ma'am.
Yes. Now they have the money. They got the money now. So this was the second thing. Now what they will do? They will spend the money here. Yes or no? They will do expenditure. Yes.
Yes, ma'am.
Once they got the money, you got the wages, you got the interest, you got the profit, you will do expenditure because from here only you need to purchase the thing. So once they will do the expenditure, then they will give them goods and services in return. Goods and services. Getting the point? So first the household gave land, labor, capital, entrepreneur to the producer. That was the first thing. Then in return, they gave rent, wages, interest and profit. And then the third one, they did the expenditure. They wanted to purchase goods and services from this one because if they want to buy chocolate, they need to go to the firm itself. In return, they got goods and services. Is this clear? The entire part?
Yes, ma'am.
Okay. Okay. So over here, how we will write this? We will write it like this. If this, okay, you can first draw it like this so that it become easy. Okay, just draw it at last. So the two sector model explain income and resources circulate between two main sector, that is household, right, and the firm. Yes, the model assumes a closed economy with no government, no foreign trade. It focuses on the interaction between household and firm. So as I told you, we have four sectors, but in this two sector, we are only focusing on two. So we are thinking it's a closed economy, right? There is no government, no foreign trade. That means the third and fourth sector, this government and the external sector, we are ignoring this. So this is what. Okay, clear? So, how would you write it? I'll give you the material. Wait, I'll give you the simple one so that it become easy for you to write it down as well. If this comes in your paper, what is circular flow of model? You will first just leave some space for the diagram and then you will write it like this. You will write circular flow in two sector economy. In the simple two sector economy, there exist two sectors, household and the firm. Which household provide factor of production? As I told you, that household is providing factor of production like land, labor, capital, enterprises, and consumer goods and services made by the firm sell them to household. Getting the entire point? What is happening basically? We are providing you production, factor of production. That means that will help you in production and consumer goods and services made by firm. Clear? And once you provide the factor of production, the firms will and consumers goods and services made by firm and sell them to household. Clear? Got it? So over here, just write, there are some assumption. Just write assumption. I want to make it simple for you. Okay, just write this one. The two-sector model explains how income and resources circulate between two sectors of an economy, household and firm. Clear? Okay, just write this. Just leave some space for the diagram and then write this. The two-sector model explains how income and resources circulate between two main sectors of an economy, that is household and the firm. This model assumes a simple closed economy with no government, no foreign trade. Okay, don't write the assumption. We'll do it later. Write it till here and let me know.
Ma'am, I'm done.
After that, you will write that as we talked, we know that this is a two sector model. So over here, only two sectors. You will write this. Just a minute. Okay. So you will write household. Who are household? Tell me. Who are household?
The people who provide land, labor, everything by
Very,
themselves.
very good. So household are the owner of factor of production, right? And consumer of goods and services. So they are the owner of factor of production because they own it and then they give it to the producing sector. And they are the consumer of goods and services. And firms produces goods and services. What firms are doing? Firms are the producer of goods and services and then they sell it to the household. Okay. And over here, it is the simple form of closed economy in which there is no government sector and no foreign trade, no external sector. And in case if somebody asks you in one marker what is a closed economy is an economy which has no economic relation with rest of the world, where you are only close, close friends. That means you will only deal with those people, not with other people, right? So there is no relation with rest of the people in your account. You are only dealing with few of the people. Open economy is an economy which has economic relation with them. So we have both the definition. For closed economy, it means in an economy there is no economic relation with rest of the world, and in open economy it is like there is an economic relation with rest of the world. Okay.
Ma'am, I'm done.
Okay. So then, before going in deep with this circular flow, we have some assumption for better understanding. So you, instead of writing this, just write assumption. First, there are two sectors in an economy, household and firms. This is the first assumption. Second is the household sector provides factor services and makes consumption expenditure on goods and services. Very important. Household sector is doing two things. First, factor services, right? And then consumption expenditure. Over here in the diagram, we say the household is doing two things. One, the factor production, right? And then the expenditure, right? On consumption. So this, and the firm produce goods. And what firms are doing? They are producing goods and services, and they are making the payments. Yes or no? These all are payments, right? Yes. So they are. So household is providing this factor of production and doing expenditure on goods and services. They are producing goods and services and also doing the payments for whatever factor of production they were being used. Then there is no saving. Very, 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 very important. There is no saving in an economy, which means all income earned by households spent on consumption expenditure, and firms are also not saving their profit. So, for example, it's like they give land for, right? In return, they give 100 rupees for land. They spend entire 100 rupees on consumption, and in return, they give the product. So, you can say 100 rupees they gave to this household, but 100 rupees they return it to this. So entire money is being spent. Nobody is saving. So this is very important point. There are no saving in an economy, which means all income earned by household is spent on consumption. So whatever income household are earning, they spend it on consumption, and whatever profit firms are earning, they also are spending it. They are not saving it for themselves. Yeah, so these are the assumptions. First assumption, there are two sector model. Second assumption, that household basically provide factor services, and the household do two things: factor services and the consumption expenditure. Firms, they produce and do the payments, factor payment. And the third assumption, fourth assumption, which is very important, it is there are no savings in an economy. Why no savings? Because whatever income households are generating, they are expending it, and whatever profit firms are getting, they are also not saving it at all. Okay.
Ma'am, I'm done.
Now this one. So over here, factor services, right? So the factor services that are being provided, what are the factor services? You will write here: land, labor, capital, and entrepreneur. Okay. And the factor payment, for payment you will write here rent, or you can write it here as well. It's your choice. Rent. For labor, it is wages. For capital, it is interest. And for that, it is profit. Okay. And make this diagram. Good evening, Madiha. You joined late, so leave one page, a two page, and then draw this diagram. Okay.
Okay, ma'am.
Done, students? Done with the diagram? It was a simple diagram, like write it here, make an arrow here, then the next arrow here, and then leave some space, then make the next arrow here, and then the next arrow here. So done? Madiha and Sumaya done drawing that?
Yeah, ma'am.
Madiha?
No, ma'am.
Okay, do it. Done, Madiha?
Yes, ma'am.
Okay. Now, of course, you won't be getting it in the first go, but let me just try to match you and, do one thing. Just watch the recording of this, whatever we covered. We actually covered a lot of things like we did stock and flow, not that much, but yeah, of course, the introduction also of the two-sector model in circular flow. And this is very, very important concept. So just watch the recording. I'll just give a highlight, but again, in detail if you want. Okay. You always get the recordings. Okay. Hmm.
Yes, ma'am.
So basically, there are two sectors. One is the household, one is the firm. Right? So over here, what you people will do, you will just write this first one as the first. And then first, what basically household give factor of production to firm, like, the labor, land, capital and all that. Instead of writing this, just write labor, rent, capital, entrepreneurs. Okay. So this is the first step, that household gave it to firm, like the land, labor, capital, entrepreneur. Of course, if you are giving something to someone, in return you will get something. So firms in return gave this factor payment. They paid. If you give the land, they paid the rent. If you gave the wages, they gave the. If you gave the labor, they gave the wages. Capital, interest, entrepreneur, profit. So this was the second thing. Okay. Now this household got money. Of course, rent and wages, they all are in form of money. So they got money now. So what they basically did, the third one was consumption expenditure. That means they wanted, firms have produced, for example, they produce cake and books. Okay. So they want to consume that. So they did the expenditure, consumption expenditure. When you spend your money for consuming something, that is called consumption expenditure, right? And once they gave money to the firm, what the firm did, basically they gave goods and services to the household. Okay. So this is how. Okay. So this is how you have to write it. That for household give, first you will write first. Household give factor of production to the firms like land, labor, and all that. Second, in return, firms pay them income, right? Like wages, rent, interest, profit. And third, households spend all their income to buy goods and services from firms. And then the fourth one, the firm receive revenue and use it again to pay factor services. Right? So this is what, right? And this cycle continues. That is why it's called circular flow. So now they gave the money to, they gave first, they got the money, for example, 100 rupees. Then they give again 100 rupees to them. Right? They give 100 rupees to them. Then again, what they did? Of course, they have again the land, labor, and all that. They again give it to 100 to them. Then again, so it keeps on circulating. So it's a cycle. That's why it is known as circular flow of income. Is it clear? Is it clear?
Yes, ma'am.
You will quickly write it down. And then after that, I'll tell you how one marker question comes from here.
Ma'am, I'm done.
Okay, both of you done?
Yes, ma'am.
Yes, ma'am.
So now over here we are done with this basically, right? So the only thing which we conclude from here is from the circular flow basically, we get to know that entire income was consumed, right? But I told you that I need to highlight few of the things, right? Before that also I just need to you just for one marker you just write this. Over here in the circular flow, we have the equilibrium condition. You don't know the equilibrium right now, but you should be aware of this because I'll teach you in further classes. So over here, whatever you produce, right, that leads to your total income. And whatever your income was, you did the total expenditure. So total production is equal to total income and total expenditure. Okay. Okay, done with this. Now, one very important. In the previous class, I taught you there are two types of flow. Yes or no? What were the two types of flow? Tell me. What were the two types of flow? Read your notes and tell me quickly, both of you. We discussed two flows yesterday. Can anyone tell me which were the two flows? Madiha, Sumaya, read your notes. Yesterday I taught you two flows. What were they?
Real flow and money flow.
Yes. So basically we dealt about real flow and money flow. Okay. Now this is a circular flow. So how would you tell me which one is the real flow and which one is the money flow? So this one. Real flow, when the factor of production, land, labor and capital, there were the things, physical things were going on. So that's why that was a real flow. And when goods and services were coming from firms to household, that was these two were the real flow. But when you were doing the payments, like when you were giving wages, rent and all that, from firms were making payment to household, that was. And when you were doing consumption expenditure, that consumption expenditure, who is doing? Household is doing to firm, right? That is the money flow. Is this clear? So factor and production and goods and services were real flow, and money flow means factor payments and the consumption expenditure where money was being transferred. In factor production, land, labor, capital were transferred. There was no money, so that's why it's a real flow. Goods and services also there is no money. That's a real flow. Money flow means money. So when you are doing payments, you will do payments in form of money. That's why it is a money flow. And expenditure also, when you spend something for consumption, you are spending in terms of money only. So that's also the money flow. Clear? Okay. So in short, just write it down in your notebook. And instead of writing it full form, it's write H to F. F to H. You will get firm is for F and H is for household. Done, girls?
Yes, ma'am.
Both of you?
Yes,
No?
ma'am.
Oh. So now this is coming the very important concept that we are going to do today. Yeah. Let me see if I can paste it here. Otherwise, need to take the screenshot. Okay, fine. Okay. So over here, classification of goods we are going to do. Okay, we are going to classify the goods. Okay, so basically there are two types of good base. One, the intermediate good, and one is the final good. Like for example, if intermediate goods are that will be used in further production. Like for example, milk, yes, sugar, bread. Yes, these are the intermediate goods. Why? Because these will be come together and form something. With the help of this, I bake the cake. Yes, so this is the final good. Clear? Got the point? Yes. So these were the goods that helped in further production of something. That's why they are the intermediate goods that are going to intermediate means that are going to go inside and make something new, right? And final is basically you cannot modify it further. That's the final good basically. Okay. So intermediate goods used by the producer as it can be raw material, like the cloth purchased by the tailor, goods purchased for resale. I bought something and then I reselled it. Yes. Example, a car purchased by a car dealer for resale. These all are intermediate goods. IN means they'll go inside and produce further things. Yes. Durable capital good purchased by government for defense services. All these are basically the intermediate goods that are going to the further production of anything. Okay. But for final good, there are two goods, final good. One is for the consumer and one is for the capital producer. If it is for the consumer, that is the consumer good. If it is for the producer, that is the capital good. So purchase for direct satisfaction of want. For example, I bought a car and I am using it on my own. That is my consumer good. But for example, I bought a car, right? Buy a taxi driver and use as taxi. So from that good, I am not using it. I am using it for somebody else. Getting the point? Yes. So that's a final good. That is a capital good. Okay. Getting the point? No? Should I explain it again once more? Because I know it's a confusing part. Once more?
Yes, ma'am.
Okay. So basically, for if we classify goods, we have two types of goods. One is the intermediate goods. Okay, that is basically you are not directly consuming it. You are not directly consuming it. Okay, but one is the final good. Of course, after that there will be no modification in this, right? But final good are of two types. One is the consumer good. One is the capital good. Okay, consumer good is, for example, I bought a cake. You need to remember, for example, I gave you the cake. You cannot tell me whether this is a consumer good or the capital good. Okay, for example, I bought a cake for myself. So that is a consumer good. But for example, I bought a cake to resell it. To resell it. That is the intermediate good. But for example, I bought a cake and I divided into different parts and then I sold it. That is the capital good. So consumption, final good is of two types. One that you will directly consume it. Yes, that is the consumption good. But when you are not directly consuming it, further distributing it, that is the capital good. Okay, so let's just understand it in a more nice way. Okay, so this is what intermediate goods and the final goods. Okay, so these are used for production of other goods and services and are completely used up in the process of production. So for example, let's just take sugar. Let's just take milk. Okay, you are using sugar and milk to produce something. And when you will produce that cake, there will be no sugar, there will be no milk. You cannot identify this is the milk, this is the sugar, right? So these are for you. These are used for the production of other goods and services. Like they are basically the raw material, right? Intermediate goods are sometimes a raw material. Okay, and that are totally completely used in the production of something. So you are producing, for example, cloth, right? You bought a piece of cloth. From that cloth you made a frock. Now you cannot say, ma'am, this is the cloth. The cloth, the entire structure has been changed, right? So this is the first thing. And second, these are meant for resale. Or you bought something and you resold it. Instead of consuming it, you resold it, the same product. That is also the intermediate good. So there are two options for intermediate good. One, they will totally lose their identity in the production of further goods, or they will resell it. So these two are intermediate goods. Final goods are of two types. One is the consumer good. When a consumer is purchasing it for its own use. For example, I bought a cake and I ate it. That is my final good. Capital when purchased by producer for investment. I bought a cake, and from that cake I will make pastries and then I will sell it. So that was, I bought a cake for not consuming, for not eating, for basically for my business, or basically for the investment purpose. So that's why it's a capital good. When I consume it, that is a consumer good. I bought a cake, and from that cake I made pastries, 10 pastries, and then I sold it. So that was my investment. I invested it, I made further money from there. Basically, you are making further money. Okay. Then production boundary, they remain within the production boundary and are not easy for use of final user. So over here, sugar and milk, they are within the production boundary. You cannot directly use it as a final good. These are outside of production boundary and are ready for use by the final. So over here, final goods itself says that we are final and we are ready to use, right? Now value is added to these goods. See, sugar was for 10 rupees, but once it got mixture with the cake, the value became 200 rupees. So value is added to these goods, but here value is not added because they are final good. What the cake is for 200 rupees, no matter whether you will do anything with it, it will remain for 200 rupees only. But the sugar is for 10 rupees, but from the sugar, if you will make milkshake, right, that will be for 200 rupees. So value can be added in the intermediate good, but for the final good, they are finally ready. You cannot add anything over there. Yes. Then demand of intermediate good is derived demand, as their demand depends on the final good. See, if you demanded for 10 cakes, then the demand of sugar would be increased. If you demanded for 20 cakes, then the demand of sugar and milk bread would be increased. So their demand depends on the demand of the final good. They don't have their own identity. If demand for the final good increases, their demand also increases. If the demand of final goods decreases, their demand also decreases, right? And demand for final goods is directly depend as they satisfy the law. So over here, they don't have anything in between. If you are demanding for cake, their demand automatically increases. If you are not demanding for cake, their demand decreases. Then these goods are not included in the estimation of national income. You know, when you will calculate the national income, you will calculate cake. You will not calculate sugar and milk. So these goods are not included in the estimation of national good, and these goods are included in the estimation of national good because they are the final goods. Got the point? The difference between intermediate good and the final goods? A little bit.
Yes, ma'am.
Okay, Madhya, a little bit.
Yes, ma'am.
Okay. So let's just quickly recap it. So meaning, these are for the production of other goods and services. Like, okay, so they are basically the raw material that will basically produce something else, or you resell something, right? That is the intermediate good. Final goods are of two types. When somebody bought it and ate it or consumed it itself, that is the consumer. But somebody bought for investment purpose, that is the capital good. And over here, they remain within the production boundary, you know, but they are outside the production boundary also. Value is added to these goods like sugar. You need to add value and then only it will become cake. Here, value is not added because cake is a final good. What value you will add? Nothing. Demand of intermediate goods basically depends on the demand of their final good. If the demand of cake will increase, then only the demand of sugar will increase. And over here, demand of final goods is direct demand as these satisfy the wants directly. Inclusion, these are not included in estimation of national good because sugar, milk you will not calculate. You will calculate the final good. But these are included in the estimation of national good. Okay. Now, there are two type of good. One is the consumer good and one is the capital good. So we will do in detail difference. These goods satisfy human want directly. I wanted to eat a cake. I went to market. I ate it directly. These goods satisfy human want indirectly. I sold them in the pastry form. So it is not directly satisfying it, but indirectly somewhere pastry and cake are same, right? So these are used by consumer, direct demand. These are used by producer. Capital good, basically who demand for this? If you are a consumer, you will demand for consumption good. If you are a producer, you will demand for the capital good. If this is a cake, yes, this is the cake. If you are a consumer, yes, you will demand for consumer good. Okay, but if you are a producer, you will demand for the capital good. Getting the difference? It's the same cake, but who is demanding it? That's changed the name. Okay. And expected lifetime, most of the consumption good have limited expected lifetime, like sugar, this cake and all that limited. Capital good generally have expected life of more than 1 year in case you bought for something. Clear? Got the difference between both of them? So so basically what we got to know, goods, we have two types of good. One is the intermediate goods, basically the raw material and all that. It can be the raw material that will help in further production or resale. Okay. And then there will be the final goods, right? For final goods, again, we have the consumer good or the capital good. When the consumer demand, it's a consumer good. When the producer demands, that's a producer good. Clear? So you people will quickly take the screenshot of this, and in the next class, I want you people that this should be written in your notebook. Okay? So quickly write it down. I'll just take the screenshot. And from here, just do one thing. Just write chapter number 3, national income and its aggregate demand. A national income and its related aggregate. And its related aggregate. Okay, this is chapter number 3.